Welcome back to QAV, TK. This is episode something 806. We're recording this on the 11th of
11th.
February, 2025. How's life in Cape Shank been, TK?
Yeah, busy. Still unboxing, still unpacking, still trying to set ourselves up. Busy, busy, busy.
Yeah.
Never ending.
No, that's life in a move, right?
Yeah.
What about outside of that? You playing some golf? You fitting that in? Got time?
Yeah, so I've been going out a couple of nights a week after dinner and racing around in my golf cart before it gets dark, because it's dark here. I think sunset's around 8:30 at the moment, so I can get round
Nice.
pretty easily, have the course to myself. Yeah, it's good fun. I really enjoy it.
Do you listen to music or podcasts when you play by yourself? No?
No,
Just
just commune with nature.
lovely.
Yeah,
You get kangaroos and stuff like that at that time of
heaps,
night on the yeah?
heaps. Yeah,
Hmm. Do you
yeah.
aim for them or
No, try and avoid
no?
them.
Hmm.
Yeah, there's a couple of mobs camped on the course, and uh, I'm sure that there wouldn't be a problem, but I always go past very slowly, keep my hands where they can see them.
Right.
Yeah,
Hmm.
but generally, like once you start to approach them, they hop off.
Do they steal the balls and stick them in their pouch?
No,
No?
no,
Right.
but it's nice. That's a nice part of it. You see the occasional echidna. Um,
Oh, really?
oh yeah,
Damn, I've only seen an echidna in the wild once. Chrissy and I's like 15 years ago. We were driving country out here somewhere, and I screeched to a halt. Saw an echidna walking down the side of the road, and it was the only time I've ever seen one. It was amazing,
yeah, they
incredible
are.
to see.
Yeah, I probably see one once a fortnight. Yeah, yeah.
Oh,
There's quite a few living on the golf course. Yeah,
jealous.
and yeah, they as soon as they see you, they waddle off and put their nose in the dirt like it's they're disappearing.
You can't see me.
Yeah, you
You
can't
can't
see
see
me.
me. My
But
nose
I
is
think
in
what
the
it does is
dirt.
it presents all the quills to the attacker. So
Right.
yeah, but it's quite funny. And like, there's one that I walked up on. It stuck its head in. I walked away, turned back because it pulled its head out. So I started to walk towards it again, and it almost gave me a look of again, and stuck its head in. And the whole,
I just got home from Kung Fu and we were doing a headlock drill, and Sifu was saying when you get the person in the headlock, you got to put your head in your arm, protect your face in case they try and punch you in the eyes or poke you in the eyes if you're behind them in the headlock. So you just cover your head, cover your eyes and your nose. So if they hit you, they're just hitting your forehead. I think that's what the echidna is doing. It's just protecting its face and sticking its bum up in the air. Yeah.
Mm. Yeah,
Well,
so
that's
that's good. I
good.
see the occasional fox out on the course. In the distance, usually they've
Not
got
my
great
fox.
radar, like your fox.
No, that's a
And
shame. I
you
wish I
see,
could send him down there.
they're usually a couple, like 300 or 400 meters in the distance when they see you, and then they take off. Lots of
Right.
rabbits, which is why the fox is there. Lots of possums. I
Uh-huh.
get sick of the possums running
Mm.
around our place at night.
Mm.
But yeah, lots of
Mm.
uh, lots of wildlife. It's nice, and sunsets, beautiful sunsets, really
Yeah, I bet.
magic orange fiery
Yeah.
sunsets over the water. It's just lovely.
Well, let's get on to the market, Tony, and investing. What's going on out there at the moment?
Did you see the news today that Elon Musk made a bid for OpenAI?
I did, and I predicted that on the day of the election. I said
$97 billion.
not going to be fun to be Sam Altman when Elon's running the White House. Yeah, I imagine that there's going to be pressure in various forms placed upon OpenAI to accept his offer. So we'll see how that plays out.
And then the Chinese will release their next version and it'll be worth $9 billion, not $97 billion.
Yeah,
Yeah.
I did.
Mm.
Look, but the whole US thing at the moment is, as we talked about, was last week, whack-a-mole. It's like
Oh,
every
yeah.
day somebody says, "Hey, did you see?" And I'm like, no, and really, I don't care. Like it's just, I don't have time to
Yeah.
follow all these rabbits down holes every day. Really, it's insanity.
Mm. Did you watch the Super Bowl yesterday?
No, don't care about that either.
Speaking of Trump, he was there.
I
First time a
heard,
sitting
yes.
president went. Yeah.
Yeah.
Yeah. And an Australian played in the winning side. So there was a bit of hometown flavour in it.
Was Anthony Albanese there bending in the knee or Kevin Rudd? Do they go to bend the knee?
No, I don't know. I don't have, yeah, Albanese definitely wasn't. I don't know about Rudd. I didn't see him. He
Mm.
wasn't mentioned, nor would he likely to
Hmm.
be mentioned. Paul
I'm pretty
McCartney was
sure
there.
one
Taylor
one of
Swift
them will
was there
be
watching her boyfriend
right.
lose. Yeah.
One of them will be there to bend the knee in the next week. I'm pretty sure, because we will talk about
Well,
steel and aluminium tariffs.
The Fin Review was saying it's all done. Albanese has spoken to Trump already, and
Oh,
he's confident that Australia won't be caught up in it.
right.
Who knows?
That must be new news.
Who knows? I mean, I imagine everyone gets off the phone with Trump going, phew, yeah, he's agreed to all they've asked for. 5 minutes later, they read about it being overturned in the press.
Yeah, you think we have to worry about or whack-a-mole? Imagine, running another country right now and just not knowing what's going to come out of left field on any
Yeah,
day, and then your media is going to be all over you. What are you going to do about it? You can't give my answer, which is I'm just fucking ignoring everything that he says, quite honestly.
which is
I
the
mean, I
correct
think,
response, isn't it? Really?
yeah. Yeah, that's what you said about Trudeau last week, right? That's what Trudeau should
Yeah,
be going. Like, I'm just ignoring it. It's just all
yeah.
nonsense. Mm.
No, exactly. Yeah. So yeah, but it's I mean it's out there in the market. I think the market's been worried about tariffs since Trump was elected.
Yeah,
So I'm not
even if they're
seeing.
not directly on us, they're indirectly affecting us, right, through China or whatever.
Yeah, yeah, definitely. But
Mm.
it doesn't seem to have affected things that much. I mean, there was some volatility when Trump was elected, but I think my reading, the iron ore price is now a buy again. So it's been going up recently.
And the market is at an all-time high.
Mm.
It's going bonkers. It's up like 10% in the last, I think, few months,
Yeah.
more or less. It's up, going like. And actually, I'm going to introduce something later on in the show that you will be super impressed by. I know, because I'm impressed. You know,
You're
all the
impressed. I'm
leading
impressed.
all the leading investment gurus
Mhm.
have their own indicator. You got the Buffett indicator, you got the Kopic indicator. I'm introducing the Reilly indicator today.
And do you think that makes you a great investor?
Well, no, it's the other way. Now
Oh,
that I am a great investor, after 6 years of doing this show, I'm an expert.
uh-huh.
I'm at such a level. Introducing my own indicator, which we'll talk about later.
Okay.
The Reilly indicator. You're gonna love it.
Yeah,
People are
good.
telling me, it's the greatest indicator they've ever seen, saying it's really fabulous. It's going to be
Uh-huh.
great. It's going to be the most beautiful indicator the world has ever seen.
I'll look forward to hearing what it is.
People from all around the world are going to come to admire my indicator. Take a look at my indicator. Are you pleased?
They're going to
Is that
flick
your
your
indicator,
indicator.
or are you just
Yeah.
pleased to see me? Anyway, talk about some stuff, and then I'll tell you about my indicator.
Well, I was going to talk about the dummy portfolio performance versus the light portfolio performances. I think, as you pointed out a couple of weeks ago, the dummy portfolio and I think one of the light portfolios did well last year and outperformed the market, but three of the light portfolios underperformed the market. So I've been doing analysis. I thought I'd landed on a reason, but I did the analysis last week and then prepared for the show this morning and went back and went, not so sure after I reviewed it again. But I'll tell you what my hypothesis was, particularly for the dummy portfolio. So a lot of the outperforming stocks in the dummy portfolio have been held for quite a while. Corvest, I think, being the longest, KOV.
Mm-hmm.
And its performance was up a lot last year, calendar year. But it was bought back in 2020, April 2020, in the dummy portfolio. So by the time last calendar year rolled around, it wasn't on the buy list anymore. So I think what may have been my sort of theory is what's happening is that the longer the portfolio is going for, the more chance you've got to have stocks which have been going up consistently for a long time. So, we pick the weeds and let the flowers bloom. But those stocks that are blooming aren't necessarily on the buy list anymore because they've gone up in price, but they're still kicking on. So that was my theory going in. But then this morning I had another look at it, and the dummy portfolio also bought some stocks during 2024, which did well, like Parenti. So I'm not sure that sort of longevity of some of the, I think there's 4 stocks that have been there for a while, is the reason. I've got to dig a bit further, but it's certainly helping to contribute to the reason. So I kind of suspect that the longer the light portfolios go on for, the better chance they've got of having these stocks which are continuously going up and therefore off the buy list, and that'll occur with them too. But I've got to go back and relook at it.
Right. Okay. Well, thanks for doing that.
The other thing I wanted to talk about was iron ore. So I had a look at it last Friday when I had to sell a share because I did a download Thursday or Friday, I can't remember now. And there was nothing to buy because everything was going down that particular day. So I checked the commodities as part of the download, and iron ore looked like it had just ticked up into a buy again, which gave me a couple of opportunities on the buy list, which we haven't looked at for a while. So it was, when I dropped a ruler over the graph, it looked like it was just touching the line. But then when I plugged the numbers into the spreadsheet calculator, it came out as a buy. So
right.
Have a look at that. Be aware of it. If our iron ore isn't currently a buy today, it's got a good chance of being a buy in the near future.
Right. So that, obviously I think iron ore, I think of our old friends at FMG, but we put the kibosh on FMG a while ago because it seemed to be in a bit of a disarray as a company. I'm looking at the chart now. Yeah, it's right on the line, if not over the line. What are your current thoughts on the empire of Twiggy?
Yeah, it's a good question, isn't it? I'm tempted to buy it again, and a lot of that's driven by me not having much to buy on the buy list with a high ADT that's not going down. But there's a question I know we'll get to later on, which asks that very thing. When does it stop being a red flag? And in considering that question, I sort of think, well, it's when sentiment returns, isn't it? So if you look at all those companies that have been red flagged or have owner-founders like Fortescue, like WiseTech, Mineral Resources, eventually sentiment will turn with them. People will say, okay, well, we know what's going on. It's not a good look, but the underlying business is still okay, and we're going to buy. It's a better risk at this price, risk-adjusted reward at this price. So I'm tempted to be led by sentiment. And FMG as well.
It is above its buy line and its second buy line at the moment.
Yeah, and it's just above the commodity price. So I'm tempted to, take the red flag off it.
Okay.
Well, I think the red flags are good as an indicator of when to sell, but it's a really good question. You can't hold them forever. And so if the market sentiment changes, I think that's probably a good enough indicator to say that at least some analysts are comfortable it's a cheap enough price now to buy again.
Right. Okay. What else?
Well, it's reporting season, so a couple of stocks in the news which may be held by some of our listeners. One was Nick Scali, who released some good results. Now, Nick Scali isn't on the buy list anymore, but it has been recently in the last few months. And in a nutshell, the last time we spoke about Nick Scali, I had a question mark over their expansion into Britain. And then they had a problem with their shipping transporter because the way Nick Scali's business model works is they take an order for a sofa and then build a sofa in their factory in Asia and then ship it. So it can take a number of months before the customer gets their order fulfilled. And they announced a couple of months ago that they were having problems with their shipping company and orders were being delayed and they were trying to get a workaround. They came out during their results and said they've got the workaround, that's all hunky-dory, and their British stores are doing well. And so the stock rose after that. I went through their results and I thought, this could be good spin because the Australian results were down, but that's on the back of probably this delay in shipping. So it's one to watch. But yeah, they're reporting better results in Britain than first indicated, and the share price is up. So that's Nick Scali. Beach and Energy is one that's been on the buy list for a long time. And they released their announcements and the share price went down about 4% when they released their results. However, I think it's been slowly climbing back from then. So what they said on Thursday last week was that they released an estimate of an interim dividend of 3 cents per share when the consensus forecast was for 4 cents, and so the market sold off on that basis, rightly or wrongly. I mean, why you get upset about 1 cent difference in your dividend and cause you to sell your stake, I'm not sure, but that's what analysts do. So anyway, the CEO came out and said he thought it was prudent to take to the board a dividend approach that gave us, being Beach, as much flexibility as we needed, and then when we get to 4 years, we can fully evaluate the dividend. All in all, we've had a fantastic result. All the numbers are up across all elements. So net profit rose 37%, and bottom line earnings, which I guess is net PAT, were up 164%. So, it was a pretty good result. A dividend miss, which saw the shares go down, but they've been recovering since then. So, again, another one to look at. And
can I add one to that list?
Yeah.
I saw in my news script ran this morning that SWM, 7 West Media, came out with their half-year results today, and the share price is up 5% as a result, which is good because I held my nose and made it a light buy yesterday. I have a dislike for Mr. Stokes and his 7 West Media, but it's on the buy list, generating cash. So I was like, hold my nose and put it down. And then it went up 5% today because it's according to Media Week. 7 West Media has posted a resilient performance for the first half of FY25 in a challenging advertising landscape. While total group revenue dipped 6% year on year to 727 million, the company's strategic content investments and cost management efforts have put it in a strong position to capture growth opportunities in the second half of the financial year. Sounds like it was written by their PR department, doesn't it?
Probably was.
It says, key to the company's continued success has been its focus on driving audience growth and delivering high-value content across both traditional and digital platforms. Find that hard to believe. Total TV audiences for 7 were up by 1.5% year on year, with digital platforms like 7 Plus seeing significant gains, a 43% increase in audience engagement. This offset a modest decline of 1.8% in linear TV viewership, showcasing 7's continued relevance in a fragmented media landscape.
Continued relevance. Well, they did broadcast the Super Bowl yesterday.
Right.
So that must
be... just gag reflex on maximum overload there. But anyway.
Tell you what, I had a gag reflex at the halftime show at the Super Bowl yesterday.
Taylor told me. I picked Taylor up from the airport last night. He told me about that. Yeah. Apparently it's got something to do with a Drake diss track. Oh, he's just all interested in... He told me the story was it's a diss track against Drake, and that Kendrick put it out a while ago and it was a big hit, and then Drake sued him for like $400 million, and UMG, his label. And so to give the middle finger to Drake in his lawsuit, they performed it at the Super Bowl halftime show. So it's performing on steroids. So it's alleging that Drake's a pedophile, which is why it's called A minor. Anyway, that's all I know about it. I didn't watch it. I didn't hear it. I don't listen to Kendrick Lamar or Drake or give a shit either way. So that's what Taylor told me about on the trip home from the airport last night.
Yeah. I turned it off. I went and walked away. It's just, I'll be kind and say it's not my cup of tea. I could be nasty and say it's unremitting shit. But anyway, it was just awful. And they had this strange usage of Samuel L. Jackson dressed up as Uncle Sam introducing it, which I thought was just a really poor note.
Tay told me about that. I was like, oh, that's going to make Trump and the conservatives happy. Maybe that was why they did it. I don't know.
Maybe.
All right. You got anything else before you get into your pulled pork?
Nope.
All right. A couple of things from me. I will talk about the Cameron Indicator. This is the Cameron Indicator. When I open up my alerts list and there's nothing on it, nothing even close. Okay, I lied. There's one thing that's close. The one thing that's close is MMS, which was a possible light entry a few weeks ago. It's their share price dipped strangely recently. Would be a Rule 1 sell if I hadn't kicked the Rule 1 out to 20% instead of 10%. So it's at 12% down from the buy price, but that's a long way from 20%. So it's technically not even close to 20%. There's nothing else showing up on my alerts buy list, not even because the way I have my scripting set up, it doesn't only show me when they've tripped a wire, but if they're close to tripping a wire, like within 4 or 5% of tripping a wire, 3PTL or a Rule 1, nothing's showing up out of the 100 and how many stocks? 130 stocks currently in my various portfolios. Nothing's even close to a sell, which to me is the Cameron Indicator. It says to me it's due for a correction.
Oh, you're predicting a correction using the Cameron Indicator.
Yes.
Ooh.
I'm predicting.
You heard it first here, people. Sell everything.
If everything is going so well that nothing is close to a sell, it probably means that because usually there's at least
regression to the mean,
usually there's at least a dozen stocks that that are close to a sell. They're hovering around their sell lines. Nothing's even close right now, so that to me is a negative indicator that bad times are coming. We're in the middle of a bubble. That's the Cameron Indicator,
right?
If everything's going well, no, the market's in a bubble. If everything's going well, something's about to go wrong. That's the Cameron Indicator.
And you've done about 100 years of back testing on that in the stock market.
No, I just was in the shower before and I thought, weird that there's nothing.
Hang on, you're in the shower and you developed an indicator.
Yeah. I did. I was trying to unblock my left ear, which I was telling Tony before the show was blocked with something. And I'm tapping my head, trying to get the water out or whatever's in there, wax or an earplug or something, thinking, there's an India. There's probably something in that. Anyway.
Well, Macmillan Shakespeare's only about 4 cents off its 3PTL sell too.
Right.
So, you might have something on your list soon.
Right. Well, moving right along, just for shits and giggles stories, Trump coin. I was reading about this in the New York Times yesterday. Some analysts analyzed what happened with the Trump meme coin. I'll just read some quotes from this. It's beautiful. Fast profits for early traders whose names are unknown, but some of whom appear to be based in China, came at the expense of a far larger number of slower investors who have cumulatively suffered more than $2 billion in losses after the price of the token crashed. As of the middle of this week, more than 810,000 wallets had lost money on the bet, according to an examination that the crypto forensics firm Chainalysis performed for the New York Times. The value of dollar Trump hovered around $17 this week, less than a quarter of its $75 peak value. Whether people made or lost money, it was a stellar business for the Trumps. Nearly $100 million in trading fees have flowed to the family and its partners, although most of that has not yet been cashed out, the Chainalysis data shows. It is effectively a part of the design of the entire meme coin industry, which is legal but largely unregulated. The trading is built on large early buys by sophisticated traders who pump up the price only to sell their holdings as less experienced retail investors follow their lead and buy in and often end up with losses. New York regulators call these maneuvers pump and dump schemes and said they can leave buyers who come in late with big losses. To me, that just sounds like the entire crypto industry.
Were those New York regulators speaking on their way out as the Doge people purged? Yeah. I can't see crypto regulation improving under this current presidency.
No. And I can't see anything improving under this current administration, Tony.
Well, except Trump's bank account.
Yeah, good point.
Do you know how it works when they issue something like a Trump coin? Like, is that actually, when you issue it, does whoever buys the first coin pay you? Like, when a company raises capital, it issues shares and the original purchasers of the shares send their money to the company. So does that mean like that Trump got all the, what was it? $17 or $70 a meme coin times the number of meme coins issued?
No, I think the initial price was like 17 cents.
Right. But when that 17 cents is the issue price and you buy the first coin, is the money going back to Trump or where does it go?
Yeah, I think so. Trump and whoever the company is, his company that is behind it. Yeah.
So it's a straight bribe.
A bribe?
Yeah. You're paying money to a sitting president.
Well, it was 3 days before his inauguration.
Oh,
so
okay. So just before
there's a window. Yeah.
Yeah, okay.
Yeah.
So like it's 100. The Chainalysis is saying it's $100 million. I suspect it's billions.
And the story was saying that some of the trades happened within 2 minutes of the announcement of it. Yeah. There was no warning. Trump just announced it on Truth Social that it was now available. Within 2 minutes, there was people buying it, and it looked like a lot of them were coming out of China.
If I'm right, that money goes to Trump, and then they can lay off by selling their coin onto somebody else.
Mm-hmm.
Yeah.
It's a beautiful system. Most beautiful system people are telling me that's ever been seen.
Well, it is. I mean, points for creativity. That's great.
So the steel and aluminium tariffs, I did some analysis with my friend ChatGPT on what that means. According to the ABC, last year Australia exported 223,000 tonnes of steel to the US and 83,000 tonnes of aluminium. We exported about $33 billion in total to the US in 2023 and imported about $65 billion. So apparently they were saying that one of the things Albanese is going to point out is the trade deficit that we have with the US and et cetera, et cetera. Based on the latest figures, according to GPT from ABS and DFAT, Australia exported roughly $130 billion worth of goods and services to China in 2023. So $33 billion we exported to the US, $130 billion we exported to China. So the US represents a relatively small component of our exports compared to China. But still, GPT said a 25% tariff would affect niche companies and it could have a trickle-down effect on the economy. So it's still if Albanese hasn't or isn't able to get it removed, it could have an impact on those sectors in the economy. I was just trying to get a sense for how big of a deal it really was. I have really no sense about the level of our exports to the US these days.
Yeah, well, I think the two companies that come to mind that would be affected are BlueScope Steel and perhaps Capral Aluminium. Um, Capral's down 10 odd cents today. Not much, but it's been going up for a long time. And BlueScope's in a similar sort of boat. So neither of those seemed overly affected by the announcement of tariffs.
Right.
And I'm trawling through my memory banks, but I can remember probably about 15 years ago. So it may have been in the Bush years, or it could have been the early Obama years. The Americans put a tariff on steel back then, but they waived it for BlueScope steel because it wasn't a real threat. And so, there's a precedent for doing it again, for what it's worth.
Speaking of Bush, I saw a clip this morning of Bush when he was president. Bush 2, this is W, speaking in front of a live audience somewhere. And he was saying, there have been times in the past when America has gone through these strange periods of isolationism and protectionism. In the 20s, there was a lot of that, and we didn't want to get involved in Europe. And then, of course, as a result of that, World War II happened and we had to get involved. But there's these strange periods of isolationism and, we disconnect from the rest of the world. And all the people in the comments and Reddit were like, wow, when Bush sounds like the sane guy. You know how far we've come. At one point, at the time, he was considered the most insane Republican president we'd ever had. Now, in retrospect, he seems like a good guy and sensible guy.
Over my lifetime, it's been, wow, Ronald Reagan's insane. Oh my God, W's insane. Holy fuck, look at Trump.
And as I keep saying to Chrissy, like I said this to Chrissy when, when Bush was still President Obama, I was like, you think Bush is bad? Wait till you see what comes next. And I've been saying that, the first Trump term and this one too. You think Trump's bad? Yeah. If there is a next, wait till you see what comes next. It doesn't get better. These trajectories, historically speaking, as you move from oligarchy to kleptocracy, and I think the US is well and truly in a kleptocracy now, it doesn't get better until there's a rug pull. There's a massive rug pull, and then, there's a, resetting and a stabilization. But yeah, I saw there was a good video. Do you know George Monbiot? Do you follow George Monbiot? The British leftist historian. I saw a good video of him, and he was quoting another book. Can't remember the name of the author of the book, but a guy wrote a book on oligarchies a few years ago. And Monbiot was saying there's only, historically, go back through history, there's only 4 ways oligarchies end. It's a major civil war, a major international war that brings about the collapse of that society, some other form of societal collapse, or a plague, a major plague. Basically, the only way that oligarchies end is with complete societal collapse as a result of one of those 4 factors, historically speaking. So that's what the US has to look forward to right now.
The 4 horsemen of the apocalypse.
Yeah. Okay. Now, moving right along. As I mentioned to you off air, I've now completely scripted the checklist. Got it finished on Sunday night. And then the only issue I had that I did last night was I had to do check it for audits. So at the moment, I don't have a script to check for audits, but what I do is I've got it to check our buy list for the audit status. So because our buy list has, Alex does the audits. She has a running checklist of audits. So it checks that each week, my script.
Okay.
But I do think I will be able to fully script the audits in the near future. But everything else is completely scripted now. But in doing that, I picked up what seemed to be a couple of problems with the coding of the checklist. And I want to run these past you.
It's a very good check. It's the best checklist anyone's ever had.
People tell me it's the greatest checklist. Now, keeping in mind that I don't have the greatest brain for this kind of stuff, so I'll run it past you. So the first one, basically what was happening was I had scripted the code was written around the rules in the Bible.
Hmm.
And then when I was comparing it to the actual buy list, there was some inconsistencies between the scripted result and the checklist result. And when I drilled down into it, I came to the conclusion it's actually the checklist that's wrong, not the script. But I want to check with you here. So the first one is PE versus yield. So we have a rule. If the PE is less than the yield is what we're checking for, right?
Yep.
When I look at the formula in the checklist, and this is both in the your master version, the one Alex uses, and the Flipman version that I use, the way it's formulated is we do yield minus PE.
Hmm.
And then the way the rule works, it says if it is greater than 0, then we score it a 1.
Hmm.
Hold on. No.
That's how it should work. You're saying it doesn't work that way.
Yeah, hold on. The formula currently states if the yield minus the PE is greater than 1,
Hmm.
it gets a score. But I think it should be greater than 0.
I think you're right.
Right. Okay, good. That one needs to change in the checklist. I've changed it in my script already. Okay, so I will for people listening, you can make it the change in your own checklist. So just to be clear, the scoring should be if yield minus PE is greater than 0, not greater than 1, it should get a score. It means the yield is bigger than the PE, right?
Yep.
I will update the checklists though, and you can download the new version by the time this comes out or change your own. The second is growth over PE is greater than 1.5. So I looked at, again, both my formula and Alex's formula are the same. Let me read through this. So for a given company code, what I want to do is look up the forecast EPS. And if the forecasted EPS is greater than 0, then calculate the difference between the current EPS before abnormals and the forecasted EPS, and then divide the difference by the current EPS. Gives us a growth rate. Is that right?
Yep, that's right.
Right. So I think the way it's working at the moment is with the spreadsheet, it's if the EPS growth is showing a blank, it should be showing negative.
No, I think what's happening at the moment, I've had a look at it when you sent through your notes.
Yeah.
And I remember coding this, and it was quite tricky because a lot of shares don't have an EPS forecast, and we had to cater for that because if we throw blanks into the equations, they were just returning the hashtag error that Excel often does. But yeah, I think you're right. I think I've got to rewrite the code so that it still checks for blanks, and if there are blanks, it doesn't go any further. But it still has to take into account when things are negative and not blank. So currently, I think it tests for things being above 0.
Yeah, right. So if the EPS growth is negative,
we should
it
score
should
a
get
negative.
Should score a negative, right?
Yeah.
Okay. So I got to fix that one as well.
Yep.
So those two, I'll fix them in both the spreadsheets and I'll republish it.
Thank you.
And
just be careful of that one because I spent a lot of time on coding that one to take into account different combinations of blanks and negatives.
Right. Yeah.
Obviously, I didn't get it right, but it was working. So I'll let it go.
Yeah. And look, I don't think it makes a huge difference, but it was just showing up as a inconsistency with my scripting. So but get back to the scripting then. So it runs on my own machine now, and what I want to do is now figure out how to make it available on as a web-based platform. The plan is to get it to a point where our members can just click a button and it'll generate a buy list. At this stage, they'll still need to have their own stock doctor or stockopedia. I haven't done it for stockopedia yet. That'll be another phase. You'll still need your own Stock Doctor account because, we can't share the Stock Doctor download data due to their terms and conditions. And I haven't been able to find a data provider that we can pay like a wholesale thing to. But where I want to get it to soon is where people will be able to, open it up in a web browser. It'll say, upload your filter, download your Stock Doctor filter, upload it into the thing, the script, and it'll just spit out a buy list for you. You'll still need to do commodity checks and all that kind of stuff before you buy something, but it'll basically just script the entire buy list. So, that's where I'm hoping to get it to. So,
Well done.
Thanks. And I mentioned to Tony off air that OpenAI launched a thing called Deep Research in the last week that they're slowly rolling out to different service levels, but it's incredible. Basically, you can give it something you wanted to go and research on the web, and it'll go off and spend minutes to hours researching this. Then it will write you a PhD level report and present it back to you. And some of the people that have had early access have been using it, and they're all coming back saying it's incredible. Like, it's writing PhD level reports on very, very complicated topics, going off and researching everything on the web and doing it. So I'm hoping when I get access to this twice a year, I'll be able to say to it, here's a list of stocks, which will be,
4 times a year.
4 times a year.
Yeah, most stocks have mid-year or end of calendar year annual reports,
okay,
but some stocks come out in March and September.
Right. 4 times a year.
Yeah.
I'll have it go out and just research all of the stocks, tell it to go to their website, grab the latest financial report, look for evidence of a qualified audit. If you see it, flag it in a spreadsheet, and we'll just have a ongoing reference to look at. But hopefully, I've tried to script that before and haven't had any luck, but I think Deep Research, when that's available, might enable us to do it.
Yeah, good.
I wanted to talk about MMS. I mentioned that briefly before, that it dropped 10% on Friday. There was nothing really in the news, but Jordan noticed that a broker had downgraded its target price from $21 to $15.80. And that might have been the thing that did it. It was?
I saw that too. It was reported Bell Potter downgraded it.
Right. Well, thanks for that, Bell Potter.
And now they'll probably go out and buy it. Now it's gone down in price.
Maybe, yeah. Have you looked at ABA recently? Because we've talked about this off air a couple of times.
No, I don't want to.
You don't want to. Tony got burnt with ABA. It's still happening. Like, it's been going on for months now. ABA has this thing where the share price will just sort of plummet at the end of the day and then recover the next morning. It's been going on for months. It's quite bizarre. And
it triggered a sell for me, and the share price has gone up since then. So yeah,
it keeps going up, but it keeps like having like a 5 to 10% drop at the end of day, and then it'll recover the next day, and then rinse and repeat once a week. Don't know what's going on.
No, I don't know.
Jerry asks, or Jerry has a bunch of questions. Thank you to Jerry for sending in some questions. He says, hi, Cam. Given the lack of questions lately, I thought I'd throw in a few that have probably been asked before when I wasn't paying attention. And there's no problem with asking questions that have been asked before, Jerry. We all need the reminders. Number 1, the current buy list is almost all stocks that I either own or that I have Rule 1 or 3PL sold in the past, sometimes multiple times. At what point, if any, do you just ignore stocks that you've had to sell in the past and accept that you're never going to be friends? See Cam versus Apollo Tourism and Leisure. Does TK consider the Apollo factor when buying stocks, or keep going back for more potential pain?
I keep going back. But I haven't,
Yeah.
I don't think I've had a Apollo tourism and leisure type stock. I can't think of any. And I think the other interesting point, and I notice this every week when I'm trying to find a new stock to do a pulled pork on. The last, I don't know, 12 months, I'm going to say, we seem to have the same gang of stocks on the buy list that is a bit different to, I mean, stocks come and go off the buy list, but in the past, it wasn't unusual to see, I don't know, a Macquarie Group or a CommBank or JB Hi-Fi or, some stocks we don't regularly see on the buy list pop up for a while and, get bought and the stock price marches on and they come off the buy list. And we just haven't seen much of that in the last little while. So I'm wondering if that's another sign the market's, is toppy and we're not seeing some of those stocks revert back to their mean and become decently priced enough for us to be interested in them. But yeah, no, look, I'm not put off by stocks that I've bought and sold in the past. And actually, maybe Credit Corp is the one I can point to where I bought it a couple of times and still go back to the well. But yeah, no, it's not a consideration for me.
And, Jerry, Apollo tourism aside, which I don't have to worry about because they don't exist anymore, but I don't think they got quiet or something happened.
They merged, I think.
For new listeners, back in the early days of the show, I bought and sold them several times in a period of about 6 months and said, that's it. But I did buy them again, I think, because I gritted my teeth like I had to do with Seven West Media yesterday.
And mine's another one for you.
My Macquarie, I've bought and sold more times and always lose money on it. I've never had a win with Macquarie. Yeah, no, I trust the system, even though I buy it going, I know this is going to break my heart, but it's like, we've all had girlfriends like that recently or boyfriends, you go back to the well, this is, it's not going to end well, but
they're attractive.
They're crazy and the sex is great, but it's going to end in tears, but you have to go back to the crazy well every now and again.
And I must admit, one of my musings has been whether there needs to be a different set of rules for these kind of stocks because
the crazy girlfriend rule.
Well, I'm thinking more of the stocks that we like I mentioned, like CommBank or Macquarie or JB Hi-Fi, good quality stocks that come onto the buy list. I'll say momentarily, and then as you say, we tend to have to sell them again, and then they sort of shoot up. But if we kind of didn't take that first trigger or we held on through that first trigger, they often go on to double their price.
What was the one that I was refusing to sell for that very reason a few months ago?
Auto Sports Group, ASG.
I'm going to look to see what happened with that because I'd forgotten about that. ASG. I sold it.
Well, I was just reminded of it because I owned JB Hi-Fi about 18 months ago, I think, and now the share price is about double what I sold it for. And I only know this because they were in the paper today because they've just reported. Yeah, I don't know. I don't have a set of rules for keeping a hold of those companies. The sort of thing I thought of was if it was like a very large market cap stock, and it comes on the buy list, we might be a bit more forgiving. But I haven't come up with a way of setting up some rules for that.
I finally sold ASG when it became a 3-point trendline sell back in the 18th of November. I bought it at about $2.17, sold it at $2.05. It's currently $1.77.
So it worked.
So it worked. Yeah, it went down to $1.67 at one stage. Yeah, recently. Oh, yeah. It's dropped from $2.43 in October, end of October, down to $1.77 now. So there you go. 3-point trend line sell saved me there. But yeah. Yeah, so maybe some more forgiveness for some of those stocks.
Yeah, I mean, the rules work as they did in your case, but there is a bit of a regret when you buy a CommBank at $80 or whatever it was and sell it because it triggered a stop loss, and then it goes up to 150 or 160, whatever it is today.
Second thing from Jerry, bad news sells. Is there a trigger for bad news to be no longer relevant? Oh, this is what you were talking about earlier.
Yeah,
Enough time passed, a set of good results, etc. If Fortescue loses their CFO and half their executive team and you sell, are you waiting for a new team to settle and staff turnover to stop? Or if they release results and they don't seem to be impacted, do you then ignore the bad news? So you said sentiment earlier.
Yeah, I think we have to use sentiment. Because other people who know more about Fortescue are making, big money decisions about whether it's a buy or not. So I think Jerry's right. There is a period of mourning and then a period of forgiveness. But buying stocks on the stock market is all about risk and reward. And when the price gets cheap enough, the money comes back.
Again, it just reminds me of the crazy ex-girlfriend rule. Like eventually you go back.
That depending on how much you had to drink.
Depending on sentiment. Yeah.
Sentiment.
Yeah, there's enough guys that seem to be going back there, so maybe I'll go back too. I mean, like
I think also at the moment in the market too, it's like there's not much else to buy. So you start looking at stocks like FMG again.
There's not much to buy? Well, that's true. At
least at a high ADT.
Well, even somebody, one of the Light subscribers sent me an email the other day saying that the stocks that I recommended for Light subscribers last week, I'd recommended a couple of weeks earlier. He said, was that all that was on the buy list? And I was like, well, no, there was a lot on the buy list, but most of the stocks when I looked were having a down day. There was only 5 or 6 and we already owned 4 of those. And the 2 that we didn't had low ADTs, and I think one of them was SWM too, which I was avoiding. But then I, gave up yesterday. But no, there's E-Road, I think, was another one, which is a low ADT.
Yeah, it is, yeah.
But yeah, there wasn't a lot to buy because it was a down day for nearly everything that was on the buy list when I looked last week.
Yeah, same.
Jerry also asks, market peaks. Even though the market is currently at all-time highs, I've had a couple of sells, WGX and MMS, so I'm sitting on cash. In the past, when I've bought stocks at market peaks, more often than not, I've ended up with Rule 1 sells as the market regressed due to the Cameron indicator. You didn't say that, but that's what people will say in the future. Is this more of a comment than a question, as I think I know the answer? No one rings a bell at the top, stay fully invested.
Mm-hmm. Yep, that's the answer, Jerry.
Yeah.
And, like we're saying, the system takes care of itself. I was looking for something to buy towards the end of last week and there wasn't anything there because everything was down, having a down day. So, that's what happens at the top of the market. There's little to buy.
Yeah, that's right. But, if you went back to, let's say, January last year, you could have said the market's at an all-time high when it was at 7.6.
Correct.
I'm not buying anything, and now it's at 8.7. It's gone up 1,000 points since then in the last year. So, as you say, no one rings a bell at the top. We never know.
That's right. And Jerry, that's right. If you can predict the top of the market, you're a genius. But
you don't need QAV. Yeah. Tell us how to do it. We'll join your system.
Yeah, exactly.
Good. Thank you, Jerry. All good questions and, good self-answering too, Jerry. Oh, Jerry obviously gets it. He's answering his own questions correctly. So, yeah, well done, Jerry.
I always score well on tests when I answer my own questions correctly.
And Dave from Newey, good old Dave from Newey, he says, happy 2025. I don't have a question, more of a share. The COVID cough will roll off 5-year 3PTL charts from next month. A lot of stocks L1 is either March 2020 or within a couple of months of that. Also, a few stocks will have a new L1 every couple of months for most of this year. So keep an eye on sell lines as they'll likely change a lot over the rest of this year for a bunch of stocks. MLX and MMS are good largish stock examples from the current buy list. CAA and KOV, good small stock examples. Oh, don't tell me that about KOV. That's my good light stock that Tony mentioned earlier. Cheers, Dave from Newey. Yeah, really good insight,
Yeah, I
Dave.
thought so too. Um,
Isn't that crazy that it's been 5 years since the
ah,
COVID cough next month? That's crazy.
it is. It's gone quickly, hasn't it?
Holy shit. Like it really has. Like
Mm,
5 years since
mm,
COVID hit. Oh my God.
mm.
That's insane.
That was my take on it too. But yeah, Dave's exactly right. And the COVID cough is the low point for most stocks, if not all of them. And in the next month or two, it's going to roll off the 5-year graphs, and therefore something else will be the low point. But that's reasonable because, coming out of the COVID cost, most things were going up. So the idea of the 5-year graphs and the highs and low points is to put guardrails around the trends and, take COVID out of the equation. The trend line changes a little bit. So it's a valid thing to happen. But it's going to have different repercussions for each of those stocks Dave spoke about. So MMS, I think MMS is about 4 cents above its sell line now, but in 2 months' time, that line's going to go down, I think. So it'll actually get further away from its sell line. Whereas some of the other stocks get a bit closer to the sell line, but from memory, Corvest is still way above its current sell
Well,
line and its projected one too.
I just looked at Corvest. So its current sell price is about $8. It's trading at $10.85. When I move the L1 out past the 1st of April, it goes to the 1st of May. Sorry. When I move it out, the date on the Breadalator to the 1st of May, the low point becomes April 21, L1,
Mm-hmm.
and the sell price goes up from $8 to $9.67, but it's at
Mm-hmm.
$10.85. So yeah, it's still way above that.
Yeah.
But yeah, it'll be interesting to see what stocks get affected. That may change the Cameron indicator because a lot of stocks may get closer to their sell line. We'll see. Well, that's it. That's all the stuff that I've got. You've now got your pulled pork. Who are you going to pull for us today, Tony?
Well, interesting one. And I picked it because it's Grange Resources, GRR is the code. I picked it because it's the top of the buy list. I did it many years ago, but not recently, so I thought I'd do it again. And in my research, I found a couple of interesting things. The other thing to point out is that when I did the analysis, it was on Alex's download from the weekend when the price was 23.5 cents. The share price I checked before we came on is now at its sell price of 22 cents. So people need to be aware that this is either now a sell or if it bumps back up the next day or so, it's pretty close to the sell line.
But then you said you think iron ore, it's an iron ore stock, is nearly a
Yeah,
buy. So I would have
yeah.
thought it would be going in the other direction.
I did
Interesting.
too. But as we go
Did it
through the
come out with
pulled pork,
results?
yeah, the results are great. But as we go through the pulled pork, we'll see that the problem is they've announced that they might be shutting the mine in a year or two. So
Ah,
that's
okay.
weighing on the stock. So it's
Mm,
it's changed from being it still is a great cash flow generator, and you
mm,
can buy it for less than 1 times cash flow at the moment. But there's
mm,
a good chance that the cash flow only lasts for another 2 years. So that's why
mm.
the market's walked away from it. But let me
Although
go
the
through
share
it.
price, so I just noticed that when the quarterly report came out at the end of January, the share price went up 15%.
Mm,
Hmm.
numbers were good.
Yeah. Okay.
Yeah. Okay, so for people who don't know, Grange is based in Tasmania, which is kind of an unusual place for an iron ore company, but apparently magnetite's been found in Tasmania in the northeast for over 100 years. And Grange, in one form or another, has been going for over 55 years. It's based in or near Burnie in the northeast of Tasmania. The difference with Grange is they produce very high concentrate iron ore, and they produce it in pellet form. And the reason they do that, even though it requires a little bit more processing than just simply digging it out of the ground and sending it off to China, is because iron ore pellets are higher in concentrated iron ore, ferrous oxide, than just lumps that come out of the ground. And therefore, it's better for the blast furnaces that use it to make steel. So they produce less slag and less. It takes less energy to burn the pellets, and it's better emissions. So they're considered to be a better product. On the flip side, it's being shipped from Tasmania rather than from northwest WA, and so the transportation costs are higher, but given a better concentration available, it's competitive in the market. They operate mainly in a place called Savage River, and that's the name of the iron ore mine. It's 100 kilometres southwest of the city of Burnie, and it also operates a plant to produce the pellets in a facility called Port Latter, which is 70 kilometres northwest of Burnie on the coast. So 2 operations for this company, both near Burnie. They have picked up a tenement in WA, and I thought it interesting that they picked up a tenement 90 kilometres away from Albany, which is in the south of WA, whereas the Pilbara, where most of the iron ore mines are, is in the north. So I don't know if this company likes being in the bottom end of the continent or not, but that's where they've been exploring. The project in Albany is called the South Down Magnetite Project, and if it comes to fruition, it's quite large, with ore reserves of 388 million tonnes. So worth progressing. They've been working on it now for a long time, and they've announced that they're at the stage of looking for equity partners and getting final approvals to bring it to market. Bear that in mind. The other thing to note about this company is that it's nearly half owned by a Chinese steelmaker called Shagang International. They currently own just under 49%. And they're a large steelmaking company coming out of China. They're in the Fortune Global 500. And way back in 2009, they took a 69% stake in Grange, and they've slowly sold down to just under half in that intervening period. All looks okay at the moment, but towards the end of last year, the company had to come out and announce that their plans for expanding the Savage River mine, which is due to finish in 2027 onwards. So they said 2027 to 2029 are being put on hold. So basically what they were doing was they were investigating and doing a feasibility report for building an underground mine under the open cut mine at Savage River. And they announced the results of that feasibility study back in about January of last year. And the share price has been in decline ever since then. I couldn't find out exactly why, but in reading the report, I think what may have happened is that the report says that there'll be a lull in the mining of iron ore and processing of pellets in 2027 for a year or two, because they have to shut the open cut mine first to build the underground mine underneath it. So I suspect, that put a spook in the market, that there was going to be a couple of years when cash flow would be down. But I can't definitively say that's the case or not. However, at that stage, they were saying, big tick, project's going to go ahead. In the last month or two, the board's come out in January, following an article on the Fin in December, saying that actually at the current iron ore price, they're not going to go ahead with the open cut mine. So basically, it's pull up stumps in about 3 or 4 years, anywhere between 2 and 4 years, which has then spooked the market even more. I'll read from the Fin review from December 17th, 2024. One of Tasmania's biggest employers has warned that its $1.3 billion plan to expand the Savage River mine south is unviable at forecast iron ore prices. Grange Resources, which contributes nearly half of the state's mining tax revenue, has planned to transform its rapidly depleting open pit operation to an underground mine on Tasmania's western coast. The mine's output will begin falling in 2027, and it is expected not to produce anything by about 2029. If the site, which produces high-grade iron ore concentrate shipped from a jetty near Burnie, does not progress with the proposed underground expansion. Grange Resources feasibility study for the underground project reveals it will cost about $94 per tonne to dig up iron ore over the life of the mine, and about $80 per tonne once the full extension is complete by 2030. But these costs exclude shipping from a remote jetty in Tasmania, government taxes, and government royalties. Grange Resources does not estimate shipping costs in the study published by the market. However, freight costs are higher from Tasmania than from the Pilbara. Higher grade iron ore trades currently at 120 per tonne on the Singapore Futures Exchange, but brokers are tipping the iron ore price will decline next year and through to the end of the decade. Goldman Sachs expects a 10% fall next year. And while Grange Resources commands a premium thanks to its high-grade output, boasting 65% iron content, 3 percentage points above the benchmark, the cost of production at the expanded mine means that the company would barely be breaking even at today's prices. Grange Resources said it would update the market if anything changes. Our focus will be on the continued delivery of iron ore from the open pit as we reassess the timing of the commencement of underground production, it said. Grange is one of the state's largest employers with 680 staff and one of Tasmania's top taxpayers, paying $23 million in mineral royalties. Work on Southdown, that's the one in Albany in WA, progresses and may plug the gap if Tasmania shuts. However, some approvals look like they are still required, and the mine may start in an abridged form. So this stock is becoming more of a story type stock. Even though it's throwing off lots of cash, the cash is likely to come to a standstill in the foreseeable future, unless something happens. Now, what could happen, iron ore price turns up, in which case it becomes feasible and they start to build the underground mine. They get the right approvals and the right partners on Southdown in WA and move the mine to there. But that's a fair bit of work. Or, being the largest employer in Tasmania, the government says we might create a package of incentives to have you stay in the state. So I suspect my take on this company is that it's bouncing around at the bottom of its stock price at the moment. It's just become a sell for us, but there is scope to re-rate if they can solve the ongoing mining of iron ore problem. And you have to think that there's a lot of people with vested interest in them doing that, including management, but also perhaps the Tasmanian government. So a solution may be found. But whatever happens, it's going to be driven by announcements now, the price, rather than by fundamentals in the company. So to go through the numbers, stock price for the analysis is 23.5 cents, which, as I said, is above where it is now. No stockbrokers publish analysis on this company. Therefore, there is no consensus forecast, nor forecast earnings per share, which means no RB2. Yield is currently over 10%, but that's a question mark on that. Is it sustainable? Even if they keep paying that rate for the next couple of years, I suspect they might decide to stockpile some cash in case they need it while they work out what to do. So I wouldn't be surprised to see a dividend cut on this company in the next results. But currently it scores highly for us. It's above bank debt and it's above the PE for the company. Stock Doctor financial health is strong and the trend is steady. But again, for how long? Stockopedia quality ranking is 93, based on an F score for health of 6 out of 9, which is good. Stockopedia value rank is 99 out of 100, which is great. However, it's almost rock bottom for momentum because the sentiment's gone down. So the Stockopedia ranking for momentum is 10 out of 100. And the overall Stockopedia ranking is therefore dragged down to 75. So they rank it kind of how I do. All the metrics are good, but sentiment's bad. It's below our buy. It's actually a sell. PE is 2.5 times, which strangely enough is not the highest or the lowest in the last 3 years, given it's that low. So we can't score it on that. Prop CAF is less than 1 at 0.96 times. So it throws off lots of cash and we can buy it at 1 times cash, but the question is for how long. IV1 is 47 cents and the current price is 22. So it's way below what you would calculate the price to be based on its numbers. There's no IV2 because there's no forecast earnings per share. Net equity per share for the company is 89 cents, which means we can buy it at a quarter of book value. Again, reflecting the fact that people are wondering how long the assets are going to be around for. I've scored it a 0 for owner-founder. Even though Shigang owns nearly half the stock and gets to appoint some of the directors or the controlling number of directors on the board, they're not really the owner-founders. So I'm not going to score it for that. Don't really need to because the quality score is so high. There has been consistently increasing equity and the PE is less than yield, so they both get scores, which means to sum up the quality, there's 12 out of 13 or 92% for quality and 0.96 for total QAV score, which is very high and puts it at the top of the buy list. So, yeah, all I can say is that go on sentiment with this one. On the numbers, it's fantastic, but it's really a story stock now. As soon as they announce one way or the other what they're doing, whether it's shutting up Southdown in a couple of years' time, or whether, Savage River, or whether it's getting Southdown and WA running, or whether it's getting the open cut running, whether it's getting government support, which makes all that happen, or whether it's not, the share price is going to be driven by the story going forward.
So just to be clear, it's at the top of the buy list, but it's actually a sell.
Yeah.
And in the buy list, we can't buy it because we say iron ore is a sell, but iron ore is actually a buy. So just to be clear on those things, don't trust anything on the buy list when it comes to GRR.
Well, as we always say, before you buy something, do the more up-to-date research.
Yeah. And it's changed. Both of those things have been updated in the last 24 hours since we put it out. All right. Thank you, TK. That's GRR. And that brings us to after hours, Tony. Baffleck. Well,
yeah, not much for me. A couple of horses on the go. Baffleck ran third. Yep.
Baffleck, really? Ben Affleck? You named your horse Ben Affleck?
I didn't name it, but someone else did.
Okay.
Its mother is called J-Lo, so it was called Baffleck. Yeah. Ran third on Sunday. And I think we'll win a race. It needs to go out in distance. Its next start will probably be at 2,400 metres. So, yeah. And one called Lake Forest is running tomorrow, just to be aware. I put the details on the Facebook group. Funny story about Lake Forest. I bred it and sold it, and now we bought back into it because it was put up for resale on an online auction. So we bought back into it, the other breeder and myself. Funny story is, nothing funny about that. We just thought it was a great opportunity. The other funny story, though, is that I've never seen this happen before, but another horse called Lake Forest from overseas won $1 million race in the Spring Carnival last year. So don't be confused. This is not the $1 million horse. Normally, when an overseas horse comes to Australia and there's an existing horse with the same name, they have to change their name. So you often see horses will be called something like My Lake Forest or Our Lake Forest to get around the double naming, but they didn't have to for some reason. Anyway, it's not the Lake Forest that has lots of prize money. It's Our Lake Forest running in the provincials tomorrow. But it's a good horse.
That reminds me of a story I read this morning about movies having the same name. They were talking about how, traditionally you wouldn't have two movies come out at the same time with the same name. But Netflix has been doing that recently, putting out movies that it's made. There's two movies called The Bubble that came out the same time on Netflix last year. There was a Judd Apatow comedy, and maybe it was before last year. And then there was a Japanese animated film, and they had the same name, and they both came out. And the article was saying the thing is that Netflix doesn't give a shit. Is it like traditionally movies had to survive on getting bums in seats or, buying the DVD, buying the, download, whatever it is. And so you had to separate your movie from the rest of the movies and blah, 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 blah. Netflix doesn't care if the movie does well, the movie doesn't do well, because it's all the same. They just need content. And
yeah, right.
you know. So they just buy stuff to fill up the channel. It doesn't matter if it does well, doesn't do well. People watch it, people don't watch it. How the business model for movies is completely different now when it comes to Netflix. It's just you want to know why there's a lot of shit on Netflix is because Netflix don't care. It's just like, yeah,
Yeah.
is it a movie? Good. Yeah, we'll have it. Yeah, we'll put it up there.
And you think Seven West Media is bad?
Yeah, yeah, yeah.
Don't you hate that though? Like I do it all the time. I'll jump onto Netflix and I'll go, nothing there. And I'll jump onto Apple, nothing great there. I go through the whole lot, think to myself, I'm paying, $15 a month for each of these, and I can't find a damn thing to watch.
You're lucky if you're only paying $15 a month. It's $15 US, probably more like 20.
Yeah.
Well,
Okay.
I've got the different problem. I've got stuff that my kids keep telling me to watch, and Chrissy and I have watched one episode of television in the last 2 months. Like
Really?
we never get time to sit down and watch TV. We watched the first episode of the new season of Severance
Is
this
it good?
week. Yeah, it's really good. It took us 2 sittings to get through it because she falls asleep halfway through it because we're watching it at like 10 o'clock at night. But yeah, we just don't have time to watch stuff. If I'm watching anything these days, it's reruns of The Shield or something like that
Oh,
because I've got
really?
it on in the background when I'm
Yeah, okay.
doing the dishes or something like that. Yeah, I just don't have time to watch TV or movies anymore these days. It's just,
Alex
yeah,
was telling me she does that when she paints. She puts episodes on, and I'd
yeah.
recommended Rivals to her, and she got
What's
that
that?
this Rivals.
Oh,
I think
that's
it's
the
David
David who?
Tennant.
David
Yeah,
Tennant? David who?
Billy Cooper.
Yeah, right.
Yeah, and she got that engrossed by it. She had to stop painting and watch it.
Well, that's the thing. Like you recommend shows and Hunter recommends shows and yeah, they're all on the list, but we just don't sit down and watch stuff. But we did watch that Severance. It was good. Well, but in my reading this week, I'm trying to read I'm trying to get through the John Le Carre
Oh
stuff.
yeah.
I'm on his third one now, The Looking
Uh-huh.
Glass War,
Yep.
which I'm enjoying, but I'm interspersing between that and the Yes Minister scripts,
Oh, okay.
which
They're
I'm
great,
just
aren't they?
loving. Oh
Yeah.
my God. So great. And even like somehow just as much fun, if not more fun to read
Hmm.
than to watch in a strange way. I mean, the performances by Nigel Hawthorne and Paul Eddington are, obviously stellar, but just even the reading of it is just,
They're great
I've,
scripts. Yeah.
I've got some quotes that I copied down that I thought I'd share with you. This is from the introduction to the scripts in if people haven't read it before, in the published version, they sort of make out that these are taken from the diaries of Hacker and Sir Humphrey. It's they're excerpts from their diaries that they've put forward. So but in the introduction, the guys who wrote the scripts who are making out that they compiled this from the diaries. They're talking about Hacker and they're saying, being a journalist, Hacker had no particular talent for reporting facts when they're talking about his diary entries. Also, years of political training and experience had taught Hacker to use 20 words where one would do. Hacker himself processed events in a variety of ways, and the readers will have to make their own judgment as to whether any given statement represents A, what happened, B, what he believed happened, C, what he would like to have happened, D, what he wanted others to believe happened, or E, what he wanted others to believe that he believed happened. And then the last one I've got this is from Hacker's diary. Well, I said, opposition's about asking awkward questions. Yes, said Sir Humphrey, and government is about not answering them. I was surprised, but you answered all my questions, didn't you? I commented. I'm glad you thought so, Minister, said Sir Humphrey. It's just
It's great, isn't
like
it?
first class stuff that holds up so well and is just an absolute masterclass in not only in writing and acting, but in politics.
Oh
It's
yeah.
just beautifully done. Those guys, it's absolutely legendary.
I read those
Anyway,
scripts back when I was at uni, actually, when this TV series had just finished. and
Really?
they were fantastic. The only thing I'd say is like towards the end, you could tell the template they were using for each script. There was an issue, um, there would be obfuscation, there was a obvious political expediency, and then it'd be resolved.
Yes.
Yeah,
Yeah. There was a formula for it,
yeah,
but
but still really good. I agree.
yeah, it's
Magic.
great. Holds up.
Getting back to Le Carre,
Mm.
The Looking Glass Wall is one of the weakest, probably the weakest of his books.
Oh, okay, really? Hmm.
Yeah. So I think he wrote a couple after the first one, which was magnificent. And then I'm going to say Tinker Tailor Soldier Spy came along, that series, and that's really good.
Mm-hmm. Mm-hmm.
So they're worth reading. And then my favorite, like I like Le Carre almost as much after the Cold War. So when he was looking for other things to write about. And The Night Manager's just brilliant.
Another TV series that I haven't watched yet.
Oh, that's
too.
good too, but the book's particularly good.
Yeah, this one is interesting. It's a bit slow, but it's kind of interesting so far in the slowness. Just its look at the main characters are just involved in this interminable bureaucracy.
Yeah.
They're not the guys that are doing the cool stuff. They've
Yeah.
got no budget.
Yeah.
It's boring. They're trying to make the most of it, and it's just a slog. And they're these middle class, middle level bureaucrats that no one gives a shit about. And yeah, it's kind of interesting.
Very slow horses, isn't it?
Well, I haven't seen that either, but I know, right? That's another one of all these shows that you've been telling me to watch that I've got queued up.
Mm.
Yes.
Slow horses could have been written by Le Carre, really.
Have you seen any of Severance yet?
The first series, not the second one.
You saw that? Yeah, right.
Loved it. Yeah.
Well, Hunter and Taylor are both watching the second series, and it's coming out episode by episode. And I don't have an Apple subscription, but Hunter got one to watch it, and then he's on my family plan. You got to watch it before I cancel it, and blah blah blah. And they're just every time I talk to them, have you watched it yet? Have you watched it yet? You got to watch it. I need to talk to you about it. It's so bloody good. Driving me nuts. But yeah, it's good. But I, for no other reason than I just love Totoro. And the boys haven't seen all of the Coen brothers Totoro films, and I'm like, oh man, you got to go and watch all of the Totoro films in the Coen brothers catalog.
Miller's Crossing.
Totoro. Oh, Miller's Crossing is fantastic, but even Oh Brother,
Look
Where
into
Art
your
Thou?
heart. Look into your heart.
I rewatched Oh Brother, Where Art Thou recently,
I never liked that.
Really, I love it.
I think
really
Clooney
held up.
overacts just too much for me in that.
Well, I think that's part of the joy of it for me is his performance in that. That was the first time I think he had done comedy. And I remember being astounded at how well he could do that sort of over-the-top character comedy.
Right.
And the Coen brothers often have a lot of over-the-top characters.
Yeah. Raising Arizona.
Right, exactly. And Goodman's character in Oh Brother, Where Art Thou is sort of over the top. There's a lot of Goodman's characters have always been in Coen Brothers films, really over the top. And even Totoro's characters, really exaggerated performances.
The Big Lebowski, yeah.
Jesus,
that's right.
No one fucks with the Jesus. Yeah, I mean, and Goodman in that as well, and Buscemi, they have highly stylized over the top character performances, but I've always just had this deep love for Totoro. Did you watch The Night Of?
No, I watched the first episode and didn't get into it.
Oh, it's very, very slow.
Okay.
But I loved it, and his performance in it is just
okay. I'll go back on
so intricate, and this character is so intricate and self-absorbed and full of anxiety and issues. It's he's just such a great character actor. So it's always fascinating, and his character in Severance, is like that, very different to his normal characters, very sort of straight-laced and introverted. Anyway,
yeah, good.
the only problem I have with watching the new season is it's been so long since I've seen the first season, and the first season was so convoluted, the storyline, that we've been watching it going, I can't remember. They do a recap, but even the recap wasn't enough. I needed an hour long recap. Hunter sort of walked me through it over breakfast on Sunday, and I was like, oh yeah. Because the boys sort of watched them back to back. They watched the first season and then went straight into the second season. Anywho.
Yep. I'm almost finished reading Sunny Boy, which was good.
Oh, you've enjoyed it? So it's held
yeah.
up?
Yeah.
Oh, okay.
The thing I think I found that I didn't know about so much about Pacino, and which I liked, was he didn't have any formal training as an actor, but he really got into, like, how can I put it, the classics, and he got into Shakespeare, but I mean, like, things like Dario Fo and Bertolt Brecht, and people like that really, like, I did first year drama at uni, and we got to study those people. Unless you did first year drama, you'd never probably hear of them. And but they were considered great playwrights, along with Tom Stoppard and people like that. So his entry into acting was through putting on lots of these kinds of obscure, great plays by these unknown playwrights, and he got really immersed in that whole sort of early to mid last century playwrights that were doing really interesting stuff. So, I can't just look at him as a movie actor, but he had a real solid grounding, and his great love is for those kinds of works, and Shakespeare as well. He made that Looking for Richard, or Finding Richard,
which I love.
documentary.
But didn't he train with Lee Strasberg? I mean, I thought at the
yeah,
Actors
he
Studio.
did.
I thought
He
that
did
was
get
the
to
whole
the
thing.
Actors Studio, and that's probably where he
Right.
got exposed to it. But he did a lot of off Broadway as well, and put on a lot of these kind of plays. And he talks about being a real introvert, and his greatest love was being told about a new playwright, and then reading it and going for walks in Central Park, reciting the lines, and really becoming immersed in it, and finding new things, new plays to talk about and put on. So some of them come from the Actors Studio, but a lot came from just his circle of friends as well.
Yeah, I like. It's been a long time dream of mine to see Pacino on stage doing something like Richard III, which is one of my favorite plays, and his performance of it is legendary. I mean, he touched on it in the Looking for Richard, but there's stories of him doing it on stage. He's done it number of times, I think, on stage. Yeah, I think he's past it now. I don't know if he's doing much stage work now. He's in his 80s now, I think.
Yeah.
But would have been great to see him in his heyday.
Well, he tells a story about King Richard, and he was saying that they put it on in Boston because he's like in this off-broad. He was always torn, like he was doing plays in Boston in a small theatre group at the same time as he was becoming big with The Godfather and then the subsequent movies after that. And he was like not enjoying the movie making, he was enjoying the stage acting and getting into the parts and discovering it and being on the tightrope every night performing it. And they did Richard III, it bombed, and then the director said, hey, I think it's because of the location. And then they took it to a church and it got rave reviews, became a sellout for ages. And they took it from the church to Broadway and it bombed again on Broadway. And the headline was, Pacino sets Shakespeare back 50 years in the US. And so that's set back. And that's what sort of prompted him to make Finding Richard, because, or Looking for Richard, whatever it's called, because he wanted to clear his name about Shakespeare and Richard III.
Oh, wow. I saw Looking for Richard when it came out and always loved it. I mean, I thought it was terrific documentary, as well as the analysis and the performances. And it had been one of my favorite plays since I first read it, like when I was a teenager. I was deep into Shakespeare when I was a teenager. I always loved, all of them really, but Caesar and Richard III in particular, I really loved.
Favorite quote?
Yeah.
Favorite quote?
Oh, well, I know the opening soliloquy for Richard III off by heart. Now is the winter of our discontent made glorious summer by this sun of York, and all the clouds which load upon our house in the deep bosom of the ocean buried. Now are our brows bound with victorious wreaths, our bruised arms hung up for monuments, our stern alarums changed to merry meetings, our dreadful marches to delightful measures. Grim-visaged war had smoothed his wrinkled front, and now instead of mounting barbed steeds to fright the souls of fearful adversaries, he capers nimbly in a lady's chamber to the lascivious pleasings of a lute. But I that am not shaped for sportive tricks, nor made to court an amorous looking-glass, I that am curtailed of fair proportion, cheated of feature by dissembling nature, thrust into the world, etc., etc.
Well done.
I used to do that as my, when I was doing mic tests at Microsoft. Before we go on stage and they want to do a mic test, I'd either quote that or do The Raven by Poe, just to be obnoxious and annoying to everyone. I'd launch into a soliloquy. And the Mark Antony's speech, Friends, Romans, Countrymen, I used to know that off by heart too. Yeah, but I've always loved Richard III because I love like the structure of it. Like how he said, like in the plays, like he says to the audience breaks the fourth wall and says, I'm going to do something really evil. Watch me do it.
Yeah.
And then he goes and does it.
Yeah.
It's delicious, you know.
Oh,
Never has ever a woman in this humor been wooed? Has ever a woman in this humor been won? I'll win her, but I shall not keep her long. Like it's deliciously evil. Anywho. Jolly good, Sunny Boy. All right, I'll have to dig that out, back out and finish it at some point. All right, well, I'm going to go back to coding, TK.
I'm going to go
my great love.
Unboxing, and I'm currently putting a desk together for Jenny, which has taken, like the box says it'll take 70 minutes. I've taken about 7 hours so far. And
a flat pack one?
Yeah. It's like giving birth. Like years ago, I bought a flat pack thing and said, I'm never again. And now I just bought another one. And I thought it was just going to be, put casters on the bottom of it. Otherwise, it comes fully formed, but it wasn't.
Right.
It's a pain in the butt. And after hours of working on it, I went back to the start of the instructions where it says, this is a 2-person job. And I'm like, really? Now you tell me?
Oh, you went back to the instructions, but it's the instructions' fault that you didn't read that in the first place.
What
Have the
I did
instructions
was,
changed since you started it?
The very first thing in the instructions, it says you can watch the video on Officeworks' page on how to put it together. No mention of a 2-man job in the video.
Right.
Yeah. After I'm like, hang on, there's 2 guys holding this together. And I've got my right foot and my left hand trying to hammer something. It's like,
oh God. Nothing I hate more in life than putting together flat pack furniture. It's just the worst.
It is. Anyway, Jenny's learned a few new swear words the last couple of days. And I just relegate it to be the last thing I do every day. Yeah. Because I hate
practice
doing it.
swear words with Jenny. Oh, okay. Get sworn at by Jenny. I thought you meant.
No. Put this damn desk.
All right.
Okay.
Well, good luck with that, TK. Have a good week.
Thank you.
See you, everybody.